Ladies and gentlemen, what we've witnessed in the past 2 days is a pretty sharp and pretty sudden collapse of local support across traditional markets, with the S&P 500 down about 4% in 2 days, which is quite significant for the S&P 500. I know it doesn't sound like it, but it's been reset to levels that it first saw at the start of July, so a month of progress has been wiped there in an S&P bull market. Now, the media will have you believe that this is due to bad unemployment data that come out, but actually that's completely false. The unemployment data came out exactly as the market anticipated. The forecast, the popular consensus amongst the market was 4.2% unemployment. The release was 4.2%. Yes, it did increase gradually, but that was already priced in via the market forecast. So this drop in the markets was not due to unemployment at all. And if it was due to some weird perceived media outrage due to the expected unemployment numbers rather than the numbers themselves. What it actually was caused by, more likely, is just more tariff news. Same old story as what we saw in April with tariffs crashing the market. We've seen another local correction triggered by, or at least a catalyst of that being more tariff news. And this, unfortunately, as well has had an effect on Bitcoin and cryptocurrency, with Bitcoin matching the S&P 500's performance in the last couple of days and dropping quite significantly as well. In fact, Bitcoin's down more significantly, 5%, which might not sound major, but this actually puts Bitcoin below a very, very important line in yellow, which goes right backwards to 2017. And we need to discuss the Bitcoin situation in this video, given the fact it is now below that major support zone. So just to not really, alarm you here, I'm just going to say it off the rip. I'm not macro bearish. I'm still macro bullish. I still think Bitcoin's in a decent position, but it's definitely looking worse than it was a couple of days ago. And there is a threat developing here. So we really need to understand that threat fully. Before we get into it, go ahead and leave a question. I was going to do a Q&A today, but we didn't have enough questions there. Leave a question in my YouTube community post page. I'm doing a Q&A video tomorrow. So anything about the market you want answered, I'll answer it. Go ahead and leave your question, and we'll check out the Bitunix Exchange quickly and then get into it. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. So I understand why people are getting concerned about unemployment, because obviously unemployment spiking to the upside has led to, or at least correlated heavily with, recessions historically. We've got the dot-com bubble, we've got the global financial crisis, we've got 2020 with the COVID drop, we've got 1989. All these recent collapses across traditional markets have, correlated with unemployment spikes, and unemployment is rounding out. Historically, when it rounds out like this, it does eventually spike, but it's also been stagnant for the last 13 months, and that stagnation could continue for another 13 months for all we know. We simply don't know when it will spike. Obviously, you can go ahead and predict it and guess and all of that. But if you were going off predictions and guesses and cycles, you would assume that it would spike after the 4-year cycle is completed, and therefore around next year in 2026. So we should still have time before that unemployment spike occurs. But the market drop we've seen in the last 2 days has nothing to do with unemployment in my view. That's just what the media is saying, because as I said, the unemployment data came in exactly as forecasted. So I think unemployment is totally irrelevant right now. I think what we need to be focusing on, more so than unemployment, is the charts themselves. And this local correction we've seen in the last 2 days has, again, raised my eyebrows for Bitcoin slightly. We've got this line on Bitcoin in yellow going right backwards from a 2017 bull market, cutting through the 2021 bull markets, forming resistance on Bitcoin, very major resistance on 2 occasions right here, another occasion right here. We broke above that line. We held above that line for support for a pretty significant period of time. And as mentioned in my last few videos, very directly, in fact, it was the main topic of my video just 2 days ago here. The next parabolic leg is almost ready. We had intense compression from the Bollinger Bands on Bitcoin on the daily chart. The most intense Bollinger Band compression we had seen since right back here in February. In February, when we saw that intense compression, it led to a 21% correction in 4 days. Unfortunately, the compression has led to a drop this time as well, right? Now, the good news is there's nothing saying we have to go downwards 21%, and there's nothing saying we're in a bear market. None of that is being said by the charts here. That's all arbitrary speculation. But the truth is, the compression, the opportunity Bitcoin had to spike to the upside due to that compression, which we hadn't seen in 6 months, has been ruined, and we have dropped downwards here locally. Now, I'm going to be honest. I'm going to go ahead and blame this on Donald Trump. I don't do political content on this channel, but the fact of the matter is, when you see compression and when you see the market stagnating for that period of time, which represents compression, it is literally just waiting for a catalyst. And if the catalyst is bullish, it will spike upwards. If the catalyst is bearish, it will spike downwards. And unfortunately, through tariff news, we have seen that bearish catalyst and we've spiked it downwards. Now, it's not all doom and gloom, because we've expected this. In fact, there's a reason why in my prior videos, and I'll do it again today, I've said $110,000 is a very, very important level. Not necessarily that this yellow line is, because I realize, as per the historical analysis from 2021, that we can, and we probably would, have expected to be spiking up and down below this yellow level. It's not exact. We see fake outs. We saw them back here in 2021, as I just said, and we're probably seeing one right now as well. So this yellow level is not the be all end all. We can fake out below it. We can come right back above it. It's not a problem. It's also not a problem inherently to see fake outs up and below very, very major support and resistance lines that go backwards years and years and years. In fact, the longer a resistance line has been around, the more likely you're going to fake out up and below it, because you have many, many times and many opportunities to fake out above and below it. It also becomes less exact over time. It becomes more vague over time. That's the case with this line right here, going backwards from 2011 and cutting through the Bitcoin price action. We've come up and above this line many, many times, but you can see it still remains relatively coherent with retests, support and resistance retests. Right now, actually, we're seeing the first time ever that's becoming a bit distorted, which is quite interesting, and that's why I haven't looked at this line much. But that just shows you that we can break up and down below very important lines that have lasted years and years and years, and they can still remain valid even though we're breaking up and down below them, as per the support and resistance retest from this 13-year long line, which previously was the longest ever line on Bitcoin, the oldest ever line on Bitcoin. Now that's lost relevance, but I'm just making a point there. It's not the end of the world to briefly drop below a support line like this one in yellow. Now, what would be an issue is if we kept dropping down and down and down and eventually reversed into a downwards trend. Of course, that would be an issue. So the major region I'm really watching right now for Bitcoin is actually 110,000. Because if this is a fake out below this yellow line, that fake out will no longer be able to be reasonably claimed to be a fake out if we drop below the nearest support zone below the yellow line, right? If we drop below 110,000 as well, it's no longer a fake out below a yellow line. It's an actual breakdown because we've broken down from support below the support we're watching, right? So 110,000, very clear neckline of resistance previously. It is now a support zone. It's also where we see a big spike on the volume profile starting to occur. And so around 110 to 104, that vague region is laid with support. Dropping below that, in my view, would trigger a bear market. Very clear, very important, I should say, to understand what I said there. Not necessarily just 110,000, but this entire region is kind of stacked with support. And again, dropping below this region here, this vague region between 104 and 110, especially at this part of the cycle where we only have a few months left and we should be moving upwards, would be extremely bearish. I don't think we can recover from that. At least not in a traditional cyclical sense. So, one more clarification, just because I'm making big statements here. If we drop below $110,000, that is not the end of the bull market, right? But it is a zone in which I'm going to be getting very, very scared that the end might be coming. The end of the bull market will only come much lower than that, and we can discuss that more specifically as the time occurs, because we'll have more information, more data, and we'll be able to analyze it from a circumstantial perspective. Currently, that's not something we need to worry about too much. But the big level, in my view, on a local perspective that you need to be watching right now is going to be 110,000. As for the upside, because I am still macro bullish, I do believe we are still in a macro bull market. As for the upside, my upside level has not changed. I believe Bitcoin has major resistance at $124,000. I believe it cannot be seen from regular Bitcoin charts. I believe the best way to view it is to look at things like this chart right here. This is an angle-based chart on Bitcoin. Every cycle from top to top and bottom to bottom, we have an angle of ascension that is halving each time. And if we extrapolate that trend forward this cycle, we can very simply see that there is resistance at $124,000, which we've rejected from locally, and we can cross-validate that, independently verify it with the power law chart on Bitcoin, which has been historically exceptionally useful for marking tops and bottoms. And we can see the green line on the Powerwall chart also found resistance at 124,000 currently. So I believe the upside level on Bitcoin remains as 124,000 and slightly ascending. And the downside level at this point starts to be important at 110,000 in terms of what would end the bear market, end the bull market definitively. It's going to be lower than that, but I'm going to actually wait and hold off on claiming what exactly that level will be until we get the circumstantial data and until it becomes an issue. Because at this point, I don't think it's necessary to speculate too heavily, especially as someone who's got a YouTube channel and people can misunderstand what I say and hold me to old claims that don't remain valid anymore. It's just easier for me to analyze it as it comes about rather than just claiming random levels. If we're being very, very simplistic, the upwards trend is formed of higher highs and higher lows. The first lower low we will make is if we drop below 98,000. So there's a basic analysis for that. The point I'm trying to make in this video is that Bitcoin has seen a local correction. It is currently in potential fake out territory. It has not ruined all of its progress by any means, but the quicker we move to the upside, the better for Bitcoin. We still have potential major triggers across the market, which do indicate that something big could be coming to the upside still. That's outside of the 4-year cycle as well. I mean, if we're bringing in the 4-year cycle, of course that's the case, but even things like the monthly chart RSI on Ethereum, we've got this massive triangle formation on the monthly chart RSI on Ethereum, ready for a massive momentum shift to the upside, which could trigger a broad altcoin season. And we've got a similar thing here on the Bitcoin 2-week RSI chart. Again, massive momentum indicator could be triggered to the upside here, which will give us enough steam, throw enough coal on the fire to ignite another big macro move to the upside. So the upside triggers are still there. They're still in place. They're waiting. Currently, we are in a little bit of a danger zone, but it's really not the end of the world. In fact, this is something that I'm not shocked at all this is happening. I highlighted this as a potential scenario for weeks on end. So all we have to do now is wait and hope that this correction can reverse to the upside. If we look at the short-term charts, probably should have done this sooner in the video, we do have some signs of hope. This overall formation, this overall corrective structure is actually resembling a descending channel formation. We can draw that in right now. It looks something like this. And if that is the case, if that is valid and true, this should lead to an upside reversal relatively soon. It's difficult to know exactly when because descending channel formations are formed via parallel lines. So there's no apex point. There's no point in which, like a triangle, you can see a triangle formation. We'll just draw it in here. Hypothetically, you know that's going to break out by the end of the triangle. There's a date, there's an end to the triangle. That's not the case with channels. So you can actually continue in channels for relatively long periods of time. But overall, this is actually a relatively bullish short-term structure. So there's not massive amounts to be concerned about, but it's definitely a time in which you want to be remaining vigilant. Guys, thank you so much for watching. I'll keep you updated, of course, with the situation. And also, go ahead, as I said, go to my post page on the YouTube channel and leave a question for an upcoming video. If you have one about Bitcoin, altcoins, Ethereum, I'll go ahead and answer it. Check out the Bitunix Exchange. I really appreciate that. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.